Hey everyone! Guys, similar to an IPO in the stock market, NFOs are intended to raise capital for the fund and attract investors. Even though NFOs are marketed, they are done less aggressively than the IPOs. NFOs can be open-end or closed-end mutual funds, and exchange-traded funds or the ETFs are also offered as NFOs. So whenever a mutual fund house wants to launch a new scheme, they come up with a public offering just like an IPO. This public offering by the respective mutual fund is known as new fund offer or NFO. Guys, it's also important for investors to know that NFO is similar to IPO, but it's not an IPO. As for the IPO, at the time of listing, higher demand might fetch you healthy listing gains, but this is not the case in NFO. The NAVs or the net assets value of the mutual fund do not depend on the supply or the demand. So, if you're wondering that why invest in NFO? Well, for the starters, the fund is cheaper than existing funds. On this note, let's check out the 4 NFOs for this week. WhiteOak Capital Tax Saver Fund. Second is Mirae Asset Global Electric and Autonomous Vehicles ETFs, FOF, that is funds of funds. Third is IDFC Nifty 200 Momentum 30 Index Fund. Last, Tata Housing Opportunities Funds. So, let's have a look at these NFOs one by one. Talking about WhiteOak Capital Tax Savers Funds. The benchmark for this is the Nifty 200 Momentum 30 Tri. Fund managers are Ramesh Mantri for equity portion and Piyush Baranwal for the debt portion. Minimum investment amount is Rs 500 and any amount thereafter. The NFO open and close dates are 16th August to 23rd September 2022. Let's talk about the fund now. So, tax saver funds, or more famously known as ELSS or Equity Linked Savings Scheme, is a type of open-ended mutual fund with 3 years of lock-in period. An ELSS fund normally invests around 80% of its funds into equity or equity-related instruments, and the rest is distributed among the debt instruments. Guys, it's the only mutual fund type which is eligible for tax deduction under Section 80C. There is no upper limit to the investment made in the ELSS scheme. However, one can only avail the tax benefits up to the investments of Rs 1.5 lakhs. The NFO would mainly try to look for qualities like the scalability of business, governance, management, strong execution, etc. And based on these qualities, fund would try to narrow down to companies with attractive valuations. For this, the fund would follow a top-down approach, where the NFO identifies the stocks and identify quality businesses and companies, and they would invest in those which are available at attractive valuations. Guys, please remember, this NFO invests in equity-related instruments and therefore vulnerable to market risk and market volatility. Guys, in the table on the screen, you can now check the performance of some of the other schemes by the WhiteOak Capital Fund House. You can now see the education, the past experience, and the schemes under management of our fund managers who are Piyush Baranwal and Ramesh Mantri. So guys, second on our list is the Mirae Asset Global Electric and Autonomous Vehicles ETFs, FOF. The benchmark for this is the Sole Active Autonomous and Electric Vehicles Index. The fund manager is Siddharth Srivastava. The minimum investment amount is Rs 5,000 and any amount thereafter. The NFO open and close dates are 16th August to 30th of September 2022. Well, let's talk about the fund now. The rising fuel prices and effect of climate change is pushing companies towards renewable resources. In such crucial times, the mode of transportation, which right now heavily depends upon crude products, is slowly transitioning to EV. This provides a huge opportunity across multiple domains, including software development, automobiles, auto ancillary, etc. And investing in each of them becomes difficult for an investor. Through this NFO, an investor would get an exposure into manufacturing of electric and autonomous vehicles and their components, their software companies, and the chemicals and other raw materials required at different value chain. Guys, the scheme would mainly invest across the following listed ETFs. Such investments are vulnerable to market-related risk and market volatility. Apart from that, investing in a particular sector also involves its own risk. As for example, if the price of the raw material increases, there is a chance of underperformance of the whole sector. Now, let's look at the performance of some of the other schemes launched by Mirae Asset Fund House. Guys, now you can see the education, past experience and schemes under management of fund manager of this fund, Siddharth Srivastav. Guys, third on the list is the IDFC Nifty 200 Momentum 30 Index Fund. The benchmark is Nifty 200 Momentum 30 Tribe. The fund manager is Nimish Sheth. Minimum investment amount is Rs 5,000 and any amount thereafter. The NFO open and close dates are 19th of August to 26th of August 2022. Okay, let's talk about the fund now. So, as the name suggests, IDFC Nifty 200 Momentum 30 Index Fund is an index fund which tries to replicate the Nifty 200 Momentum 30 Index. It basically invests in the top 30 companies of Nifty 200, which is a diversified portfolio consisting of various sectors. Guys, the top 30 stocks from this are based on the normalized momentum score. But what actually is a momentum? So in momentum trading, a person tries to invest based on the thought process that the current stock price trend would continue to persist. That means the stocks which have outperformed recently are likely to continue to outperform and vice versa. Momentum trading is mainly based on the principles of technical analysis indicators, which helps in determining the entry and the exit of any particular stock. So ultimately, a fund manager tries to buy when the stock starts to show an uptrend and exits when the stock starts to show a downtrend. Hence, 30 stocks are selected from the Nifty 200 index based on the momentum score. The fund manager stays invested along with the current trend based on technical indicators, which will also provide the conclusion of the ongoing trend. Guys, currently the top 10 holdings for this index are as follows, which are around 50% of the portfolio. The expense might be higher than other funds because of the higher churning of the portfolio. As the fund itself is an index fund, this might help in bringing down the overall expense as it would try to replicate the Nifty 200 Momentum 30 index subject to tracking error. Now, let's look at the performance of some of the other schemes launched by IDFC Fund House. Now, let's quickly go through the fund manager's details. Alright, so fourth is Tata Housing Opportunities Fund. The benchmark for this fund is the Nifty Housing Index. The fund managers are Tejas Gutka and Murthy Nagaranjan. Minimum investment amount is Rs 5,000 and any amount thereafter, and the NFO open and close dates are 16th August to 29th of August 2022. Alright, so let's talk about this fund now. Guys, one of the most valued investments for individuals is a house. The NFO would be looking for making an investment into companies that provides supplies, goods and services needed to construct a house. Due to easy access to financing and increasing income level, people are trying to migrate from rental model to owner model. This is causing revival of this sector. It also includes construction materials such as cement, cables, electrical and electronic appliances, paints, etc. Fund would have a wide pool of 307 stocks to invest, from which are related to housing theme. This will help the fund to invest across different market capitalizations. Guys, the benchmark, the housing index itself is made up of 50 stocks which has exposure to various sectors. The index is diversified as no sector is having weightage of more than 25%. The fund has an opportunity to invest across industries such as banks, cable companies, cements and cement products, electronics, etc. The fund will focus on businesses that are of better quality compared to pure play real estate companies, and also try to have a relatively lower cyclicality compared to investing in direct real estate. Guys, such investments are vulnerable to market-related risks and of course market volatility. Apart from that, investing in a particular sector also involves its own risk. As for example, if the price of raw material increases, there is a chance of underperformance of the entire sector. So now let's look at the performance of some of the other schemes. Let's quickly now go through the fund manager's details. So we are at conclusion now. So these were the 4 NFOs which are open for subscription and soon would get closed. Guys, please note that this is not a fund recommendation but purely for information purposes. So if you like this video, please hit the like button and don't forget to share. We bring quality content for you on regular basis. Guys, to receive more updates related to the mutual funds, please do not forget to subscribe to Grow's mutual fund channel. Bye-bye. See you in the next video.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.